Welcome back, everyone. We have some big news today. Netflix has angered the entire world. Seemingly, they've angered everyone on social media. We have people like Kara saying, Netflix trying their best to lose subscribers. That doesn't sound like a Netflix. I don't think they're a company that wants to lose subscribers, but they're referring to some news where Netflix could crack down on password sharing soon. The company is currently testing a new feature that would require account owners to pay extra to add users outside their household. Oh boy, this is not the news that people want to hear, especially if you've been enjoying a free Netflix account for like the past 5 to 10 years, which is the case for many people. This is not welcome news, that good thing might be coming to an end. And I think it's okay. People are upset by this. I think that's fine. The question is, why is Netflix doing this? What is the point here, right? Are they really wanting to lose subscribers? Is this an act of desperation? Is Netflix basically admitting that their growth phase is over and the only thing that they can do is just raise prices over and over again, right? What is the strategy here? So I want to discuss this news in further detail and how it fits in the whole business model of Netflix and how I see this playing out. We also, of course, are going to be giving an update on the Story Fund. This is my growth portfolio. It's still in the red right now as we got hammered over the past couple of months, but it is making good progress. Over the past week, it's up $8,900. If we go down to my holdings, Netflix is one of the holdings here. We also have some software companies here, and we also have Amazon. I've been buying more and more Amazon. It now makes up 26% of my portfolio. So we'll be going over all of this as well. All right, now let's go ahead and jump right in. Like I said, I have a real portfolio here. This is really my money. I track the performance of it every single week with complete transparency, which means I show you the outcome every single week, and I also benchmark the performance against the S&P 500. Right now, we're still in the red because tech companies have just been obliterated over the past, 3 to 6 months. They've really came down a lot, and this portfolio is full of those type of companies. So it's been tough over the past 3 months to maintain the gains, to try not to incur too many losses, but we've had a pretty good bounce back. Over the past week, we're up 8.34%, while the S&P 500 is only up 4%. So we've had a decent bounce back this week. Overall, we're still trailing the S&P 500. The S&P 500 is the red line. The Story Fund is the blue line. As you can see, the S&P 500 is still beating us as of right now. But over the past week, we've made up a lot of ground. My guess is that if the valuations of tech companies normalize, the growth will make it so that they actually outperform the broader market. But that remains to be seen. We have a lot of time until we actually see how this turns out. Now, like I mentioned, one of my main holdings here is Netflix. This is a company that's gone through a lot of troubles, and they're facing yet more drama. The big drama this time is that they're cracking down. That's not the term Netflix would use, but that's the term that users are using. They're cracking down on password and account sharing. So all of you that have been enjoying their content for free for years, it may be coming to an end. So here's the summary of it. Netflix will begin testing a new opt-in feature that will prompt subscribers to pay extra if sharing the service with people outside their own household. So they know, they have their ways of knowing if you're using Netflix in one household while someone else in a neighboring city is using it in a different household with different devices. They know if that's going on, and so far, they've just been okay with it. And I'll explain why they've been okay with it so far and they're changing their stance. But they know, and they're trying to end this thing of people sharing for free. The feature will allow households to add up to 2 sub-accounts for a fee that's less than the cost of a full-price Netflix service. The new option will be initially tested in Chile, Costa Rica, and Peru, and will roll out over the next few weeks to those markets. The company didn't say if or when the feature would be rolled out to global subscribers. So as of right now, this isn't even official. In fact, if they run the tests in Chile, for instance, and people are just revolting against it, and everyone starts canceling their accounts, that's the purpose of a test. Netflix will be able to determine through tests whether or not this will work. And they definitely don't want to go into the US market, roll it out here, and just test it in the biggest market they have. So they'll use these other smaller markets to test this feature. They'll see how users interact with it, if it has a good outcome, an overall net positive, if it has a negative outcome, and they will take a data-driven decision. So as of right now, this isn't even officially going to happen in the US. This is just a test that Netflix is doing. They say at launch, Netflix standard and premium subscribers in the test markets will be offered an option to add sub-accounts to their service for people they don't live with. Each sub-account will have its own profile and personalized recommendations, and each sub-account will have also its own password. That's a big difference. So now if you're sharing a Netflix account at a different household, you're going to have your own username and password. And then if you ever choose to separate your account into your own billing and have it be your own account, you can do that and it will keep your viewing history. So you can detach your account from your families or whoever you're sharing it with and have that be your own account on your own separate service. So the big thing that everybody wants to know about is how much is this going to cost? The cost of the extra non-household members in the test markets, if you translate it to the USD, if you convert it that way, it would be $3 per month per extra non-household member that's using Netflix. So this is kind of news that you could look at either way. I could see both arguments for it. You could look at it the positive way, kind of the glass half full, and say, look, I've been enjoying Netflix for 5 to 10 years using someone else's account. And even though that's against their terms of service, Netflix has turned a blind eye to it. They really haven't cared. So I've been getting all this content for free for years, and now they're only asking me to pay an additional $3 to continue enjoying it, which is much cheaper than a normal membership. That's one way to look at this news. Of course, that's not the way that the huge majority of people are looking at this news. They're looking at it the way of, I've been enjoying something for free for a long time, that's coming to an end, that makes me upset. So most people are very upset by this news. Again, we have tweets like this. Netflix is trying their best to lose their subscribers. This tweet has 56,000 likes, 5,800 retweets. That is a lot. That's a lot of people. Now, I hate to be the bearer of bad news here, and the one that has to tell you this, Kara, but if you're not paying for Netflix, you're not a subscriber. So when you say Netflix is trying their best to lose subscribers, the people that are using their service for free aren't subscribers. They're literally not subscribers. They're not even counted as subscribers on Netflix's total subscribers. If you've been sharing your account with 3 different people, the only one that's a subscriber is the one paying for the account. In fact, even with this tested change, where you'd have to pay a little bit extra to share it with someone outside of your household, that additional account would not even count as a subscriber for Netflix. They would still only count the main household as a subscriber, not the additional accounts. So this wouldn't be Netflix really losing subscribers. This would be Netflix causing a lot of outrage for people that have never subscribed to Netflix to begin with. They've never paid Netflix any money. They don't even have their credit card linked with Netflix. The people that are enjoying Netflix for free and all the content being funded there are, of course, the ones that are the most upset by this news. Now, another criticism or argument that I've heard is that Netflix is kind of being desperate here. They're showing that they don't have any more subscribers to gain within the US, so all they're doing is upping the price. They're just increasing prices. And my response to that is yes, that's exactly what they're doing. They have reached their max subscribers within the United States, and so they're testing ways to actually get people that are freeloading to actually pay a little bit for their service. Now, the way to look at Netflix is not as one company. You might look at it as just one company, but a better picture is looking at it as multiple companies operating in multiple markets. Netflix US has reached max saturation, but Netflix in Latin America, Netflix in Asia Pacific, Netflix in India are like 3 different companies that still have massive growth ahead. So Netflix is operating as 2 different companies. In markets where they're at maturity, they're a mature company. They're doing the price scaling. They're doing the password crackdown. That's a mature company. In the markets outside of the US, they're a smaller growth company. They're going for maximum amount of subscriber gains every single month. And that operates 2 different ways. In the US, they can do the password crackdowns. Outside of the US, they're trying to get as many people to try out their service as possible. So I would look at Netflix as being a large mature company within the US and a smaller growth company outside of the US. I think that'd be the best way to view it. Now, I completely understand that if you've been enjoying something for free for a long period of time and you're used to, kind of sharing this type of thing between different accounts and now you have to pay for it, that's not fun news. I completely understand that, but turning this to the viewpoint of an investor, you want to have companies that are able to do what Netflix is able to do. When everybody's complaining about constant price hikes, but the churn rate doesn't go up, that is an incredibly good sign for Netflix. That means they have pricing power. If you look at every single great company over the past couple of decades, all of them have this in common. We can look at Apple. Apple charges more for their stuff all the time. Their last base iPhone was 8% more expensive than last year's model. Over the past 14 years, the iPhone has gone up roughly 80% in cost. So Apple has substantial price power, and they use that. They flex that all the time. Amazon Prime has immense amount of pricing power. This is a company that just increased their price by $20 annually. In my opinion, they could do it by $50 and people would still pay for it. They have an enormous amount of flexibility with their price. This is a positive attribute for Amazon as an investor. May not be the best thing as a consumer when you have to pay higher prices, but as an investor, which is what we are, you have to look at this through the viewpoint of an investor. Having pricing power is incredibly important. We have Starbucks. Starbucks can raise the prices on their drinks and consumers will pay more. They've been doing this over and over again. The company's profit soared 31% to $816 million in the last 3 months. And they said that they're going to raise prices on their products multiple times. There's a series of price hikes as inflation is going higher. Starbucks is a company that has pricing power. They can use that to offset the cost of their labor and their overhead. Disney's another company that the pricing power this company flexes is incredible to me. Disneyland was packed last time I went, and the prices were literally outrageous. Everything is so expensive in the park. You now have to pay for the Genie Plus, which is a whole additional thing if you don't want to wait in lines for a long time. And even with these ridiculous price hikes from Disney, where they're just taking money right out of your pocket, over the next 2 months, they're expected to have possibly the busiest days in Disney Park in the history of the company. That is pricing power. This is a company that's not afraid to flex their pricing power. They don't have worries like Congress or anyone else. They make people pay as much as possible. We have examples like Spotify. Now, I don't think Spotify has as much pricing power as something like Netflix because there's so many alternatives that people might be able to switch to. But even Spotify has increased their prices of their family plan. And again, they will increase their prices when they can. When you're an investor and you're looking at companies to possibly invest in, you want ones that can consistently increase prices of their products and not lose customers. That means that they have a moat. That means that they have pricing power. That means that they can offset the effects of inflation. They can offset the effects of higher labor costs, higher product costs, supply chain costs. They can offset that by price increases. What you want to avoid as an investor are companies that lack pricing power, companies that don't dare increase their prices at all because they would risk losing a substantial amount of customers to competitors. Those are industries that are very difficult because if you invest in those companies, they are in a tough spot, especially with inflation. It makes it even more difficult for them. So I look at this news overall for Netflix. I can see why people are outraged. It was fun to enjoy it for free. It looks like eventually it's going to be coming to an end. You might have to cough up a few more bucks a month. But in my opinion, as an investor, this only means that Netflix has a lot of pricing power. They have a product people want. Whether they want to admit it, whether they threaten to cancel, I think a lot of that is overblown. People get so upset online. They get outraged on Twitter. They say they're going to cancel Netflix. They're going to make the company go under, right? They're going to punish Netflix. Then the next season of Stranger Things comes out, or Bridgerton, or a key movie that they want to see, and they really want to watch it. So at the end of the day, I think Netflix is going to be just fine. I think it will be a data-driven decision. In an investment standpoint, I'm very bullish on Netflix. I think the company's going to do great. But again, I get it. Everything's getting expensive now, and I'm sorry if you've been enjoying Netflix for free. That's all for this episode. I hope you enjoyed, and I'll see you in the next one.